Well, thank you for joining me. I'm going to be taking you through audit of non-current assets. Non-current assets, depending on the country where you are and accounting standards you've adopted. But majorly, we look at the international accounting standards. We can find these non-current assets in many standards. But in this presentation, we're going to focus on the unoccupied assets under IAS 16, that's International Accounting Standard number 16, which is property, plant, and equipment. So majorly, we're looking at the audit of property, plant, and equipment. How do we audit this property, plant, and equipment? It's been quite problematic, and yet it's a major item in most institutions. So it is quite timely to get to know how you can properly audit these non-current assets. In auditing non-current assets, you need information. There's the information which you need in your audit planning, and you must have this information before you start auditing these non-current assets. As you know from International Standard Auditing number 315, we need to really understand the entity and its environment and what you're going to audit. So I'll first take you through what information do we need while auditing these non-current assets, more so the ones that are owner-occupied. That's the property, plant, and equipment. We need a strategic and annual plan for property, plant, and equipment, that's PPE, so that you can see what are the entity plans in terms of acquiring non-current assets, in terms of disposing them, and such kind of things. What do they intend to spend on non-current assets in the next number of years, in the next year, so that this whole process of acquiring non-current assets, of disposing non-current assets, must be planned for. We don't just wake up one day and purchase non-current assets or dispose them. We must have a plan, and this plan is quantified through a budget. So as you look at the plan, you also need to look at the budget to see how much money has been allocated to property, plant, and equipment. In our audit, we shall check whether this money is not being exceeded, because it is problematic to have very big budget variances, either through overspending or underspending. Then we shall look at the trial balance and draft financials. Of course, trial balance, you can look at both the current year trial balance and the previous year trial balance, the same as the financial statements. We can look at the financials for the previous year and the draft financials for the current year. We need the general ledger. We need the PPE schedule, that's the property, plant, and equipment schedule. In this schedule, we find all PPE, that's property, plant, and equipment. Their opening balances in terms of carrying value, in terms of accumulated depreciation, the additions during the year, the revaluations, the disposals, the current year depreciation, and of course, the carrying values at the end of the period. So you need to have that PPE schedule, since it will be a summary of all non-current assets, that's property, plant, and equipment, and what happened to those assets during the year. You need the financial manual, of course. It has a lot of information about what should be done with property, plant, and equipment regarding the depreciation rates and other information. You need the revaluation reports in case assets were revalued. That is, IAS 16 requires us to revalue assets. So in case there is a valuation during the year, you need the valuation reports. The client must give you those reports. You need the ownership documents. If it's land, you need land titles. If it's a vehicle, you need the logbook that's showing that the auditee actually owns the assets. And you need the lease agreements, of course. Some leases afterwards turn into IAS 16, they turn into unoccupied assets, they turn into assets owned by the business permanently. You need the insurance policies, you need the asset register, that is very key. You need the source documents or supporting documents, like the local purchase orders, that's for purchasing the assets, the invoices, the bank statements, the board resolutions regarding purchase of these assets, the approvals, and many others. You also need the list of disposed assets during the period. So this and more information is needed while you plan to audit non-current assets, and you must understand it before you start the actual audit. Because you're going to be verifying this information, whether it is true or not true, whether it is appropriate or not appropriate, whether they have followed what these various policies require or not. And that's why you really have to first understand what you're going to audit. After understanding what you're going to audit, then you start the audit. The basic standard you can start, the basic test you can start with is analytical procedures. You need to first do analytics, compare, and see whether there are variances. For example, in the previous year financial statements, that's the balance sheet, we have the closing balance of property, plant, and equipment. So look at the previous year statement of financial position or balance sheet. See how much was it. That closing balance of the previous year is supposed to be the opening balance for the current year. Those balances must be the same, because if it's the closing balance for last year, automatically it becomes the opening for the current year. We don't expect any difference. That one will be helping you to test whether this asset still exists, whether it is completely recorded, whether the information is accurately transferred into the current year records. So really, that's an analytical procedure, and you can do it through comparing the opening balance of the current year with the closing balance of the previous year. That is a very preliminary test which you need to carry out. You don't take it for granted that these guys have transferred the balances the way they are. You need to further test that. Also, you can compute the total assets turnover ratio for the current year and for the previous year. Then you compare and see whether there is an increment or there is a decrease. At what rate are assets being replaced? Of course, these assets normally are replaced after they have overrun their useful lives. And how does an asset, for example, become old, or it can no longer be used, or it needs to be replaced? It depends on how it is being used. If the production levels are really very high on the sales, then that can justify the high turnover. But if you find that the turnover is high, the assets are being replaced at a very high rate, but the production is low. So what is happening with these assets? What is making them replace them? Also, some of them might be replaced after their useful lives are over. So you need to confirm that the replacement of these assets, the turnover, if it's high, what justifies that high turnover? So you compare the current year with the previous year. You can even do like a trend analysis for 5 years. It doesn't do bad also. Then also compare the total amount spent on PPE additions. During the year, we know the auditee normally buys more property, plant, and equipment. So you need to make sure they have not overrun the budgets. So you compare how much they spent on additions. You pick this information from the PPE schedule and compare with the budget and see whether they are not overrunning their budgets by huge amounts. Of course, I'm not meaning that they have the exact amounts as in the budget, but even if there's a variance, it shouldn't be significant, depending on the policies of the funder, the policies of the company, and such kind of requirements. The other tests, we can recalculate the PPE schedule. In that schedule, there are many items you can recalculate, like depreciation, like revaluation, and many others. You can re-add, you can subtract again and see whether everything is correct. You look at the rates they have used, whether they are the correct rates, and you are arriving at the same amounts as they have. If you find that the amounts are different, that means the accounts may not be accurate. You also need to do some inspections through reviewing the PPE schedule and confirm that all assets in that schedule are automatically recorded in the asset register, because here we're trying to test occurrence. Does the asset, did the transaction occur? Is the asset existing at the company? So we can call it existence. We want to confirm existence by picking the asset from the register, from the schedule, sorry, and then confirming that it is recorded in the register. Then also, we need to select a sample of assets from the asset register and match to the physical assets. Data can also help us to know that the transactions for assets actually occurred and also those assets exist, provided they're in the register and physically they also exist. Also, we need to check these assets recorded in the physical assets, with the asset register. There you're trying to test completeness and accuracy. All physical assets must be appearing in the register. Then also you need to agree the PPE generally just the ledgers for property, plant and equipment with the PPE schedule to confirm that these assets are completely recorded in the schedule and they exist, of course. And also you must ensure the assets are insured by checking out the insurance policies. Because if these assets are not insured, that means it may be hard to get compensation in case there's any problem like your fire or they are lost and such kind of eventualities happening. Also, whereby to confirm that all assets are purchased following the procedures, you need to look at the resolutions of the board, because in some corporations you find that the board must authorize the purchase of these assets because some of them are always purchased at very huge amounts or substantial amounts. So the policies may require board resolution or even an approval from management. So we need to look at that by looking at those resolutions to confirm that all purchased assets were actually approved by the relevant authority. And then we need to confirm that the correct depreciation rates were used by looking at what are the rates in the policies that are supposed to be used, are these ones they're using or not. Then also we can, for revalued amounts, we need to agree them with the reversion reports to confirm that the correct amounts were carried to the financial statements, that's the PPE schedule and the statement of financial position. And this revaluation must have been done by a certified valuer to confirm that it was done correctly. So we come to the end of this session, and we've been looking at audit of non-current assets, which are unoccupied, that is IS 16. And we have said that these assets have a substantial amount of money, so they need to be audited very carefully. Thank you very much for listening to me.